Well, hello and welcome to another year-end exciting webinar from Your Taxes Matter. Today it's going to be another quick one. We've allotted for an hour, but I don't think we're going to need the whole time. We got 20 great questions that you should be asking yourself right now to make sure that you finish out 2020 how you expect to. One of the things that I always love to tell clients and talk about is these are just numbers. They're coming out to an outcome that we can predict. But if we don't look at those numbers, then it is a surprise come April. Now, everything that we're going to talk about today is going to probably require swift action if you want to be able to do anything with it, because we do only have 2 weeks left before the end of the year. So sometimes, even if we aren't able to give you an idea or make something happen to impact a positive change, it's still good to know what that bill is going to be. So although it's not, it's better to get that surprise now at the end of the year, have a tiny bit of time to maybe make some additional donations and things like that we're going to talk about. But it's still better than finding that out a week before you have to pay it. So we're always about being a little more proactive than reactive. So this is the last webinar of the year. We're going to try to help you out one more time. Most of the questions end with a "it depends" and "ask your CSM." That is always the answer. So if you're confused by any of this, want to get specific about any of this, always reach out to your CSM. So without further ado, I'd like to introduce, okay, that way, the lovely ladies with me today. In the center, we have, I was going
Am
to
I
have
in the
you.
center? Who's in the
You're in the
center?
center. Yeah, we talked about that before. You were not okay. Kathy's in the center. Kathy White.
Oh, Kathy White is in the center.
There you go. And on the far side, we have.
Sarah Ruth?
There we go. Okay, so we're going to do things a little differently this time. No PowerPoint. We're just going to go ahead and have Sarah Ruth be our commentator today, ask the questions, and then Kathy and I will be going back and forth to do our best to give you something valuable. That's really our goal today. So be taking notes, and don't worry, you will get a copy of this webinar after if you weren't able to attend today, or thanks for being here today. All right. Sarah, take it away.
All right, so for our first question, do you have health insurance?
I'll take that one. That is an excellent question, Sarah. Excellent question. Back back in when the Affordable Care Act came through, one of the many things that it did was make a mandate for you to now provide insurance, or you had to have insurance. And because of that, we had the marketplace. We had a bunch of other things. Covered California is a great company. There's a bunch of companies out there that help you get insurance now. As that was repealed in the Tax Cuts and Jobs Act, or at least the taxable portion of it was repealed, you are no longer going to be penalized by the federal government to not have insurance anymore. So it took off that, so you didn't have to have insurance. So in 2019, this wasn't a topic to bring up. But when 2020 got started, things kind of changed a little bit. California came out with a mandate and said, actually, we do want you to still be insured. And that's okay on the Fed side. On the 1040, your federal return, you will not receive a penalty for not having health insurance. But if you live in the state of California and you are not insured for health throughout the year, you will be looking at a penalty. Do we have any idea what that penalty is? Or should I not have brought that up? It is easy to find, and we can find it.
I have calculated a couple of the penalties. The penalties are still less than the cost of the actual premiums that most people would have paid. And just like with the federal, there are some exemptions, and there's some short-term exemptions. So I think the big takeaway here is if you don't have health insurance for 2020, I'd highly recommend looking into getting health insurance for 2021. But yep, it's there's more than just the state of California as well. I think there's Massachusetts and a couple others. So
I want to say New York because they'll just tax you for anything. So I'm sure they're in there. So if you're in New York, just be paying attention. But yeah, that's does that answer your question, Sarah?
I think so. Thank you. Did you buy, sell, or refinance property?
I'll take that question. It's an interesting question because a lot of times when people will buy or sell their homes, they pay a lot of fees, they pay some commission, and sometimes they sell their investment homes or their rental homes. And as just really great practice, I know Chris Conrad and I, we like to look at those final settlement statements because there's usually something buried in there that we would be able to deduct on your tax return. So if you did any of that, that is something that you will not be receiving in the mail come tax time, now that it's the end of the year coming into January. But you've already received your final settlement statement. When what we would love to have you do is go ahead and gather those documents together at this time. And you're going to say, well, what do I do with my important tax documents? How can I possibly get them to you? Well, you know, we are one of those really nice forward thinking tax and accounting firms. And so we have now established a secure client portal. It's called TaxDome. And you can securely upload your documents, and Sarah will receive an email alert when that happens, and then she will let us know that they are there and we can view them. Keeps all of your personal information nice and securely in a secure vault. And so we'll be able to see those documents. But it's something that's very valuable and is very useful for us if you could get those documents over to us. If you refinanced, maybe you paid some points and some fees, we'd be able to utilize those expenses. Commissions for buying and selling property, definitely we want to deduct those expenses. And every now and then the state of California will snatch up 3.33% of the total sale price. So we definitely want to make sure we get that credited on your tax return. So lots of valuable information on those escrow statements. Thank you for asking that question, Sarah.
Of course, thank you. And then just an added note on our secure client portal, we do have how-to videos. So if you reach out to Michelle or I, we can give those to you and you might recognize my voice on the videos.
Excellent.
Question, did you move to a new state and have an LLC or corporation?
I'd like to take that one because I've had quite a few clients, specifically Idaho. Idaho is apparently very popular right now, or at least with my clients. So I've actually incorporated a few to do business in Idaho, and that's something that you need to be planning for, being in conversation with your CSM. I've been surprised by a couple of, hey, we're going next week. I've had a couple that had been planned out for a couple months. So big difference between the two. I think with all things, planning comes first. But with it, when you change states, this isn't something that, of course, you need to uh, let the IRS know. But as far as the IRS is concerned, if you're an S corp, you're actually incorporated. You have incorporated with the federal government. The EIN is the EIN. That's not going to change when you move states, but the state different agencies are interested in that, especially California. They're going to want to know that you stopped working here or you stopped doing business here, so they stop charging you $800 franchise fee every year. And with that, then you need to be moving to the state that you're going to. So for the example of that, I had a client about mid-year in 2020 moved from California to Idaho. So it's multiple steps that we have to take to do that, none of which were, hey, IRS, give me a new EIN, I'm a new corporation. You're not necessarily a new corporation. You've just moved and now need to make sure that you elect to do business in that state now. But yeah, multiple steps. That's the first one. If you moved, pay attention. If you moved and you're just a W-2 employee, chances are you didn't need to create an LLC in a different state. I'm sure there is some kind of opportunity for that to actually be a thing. But more importantly, with that, and I'm glad that I said that because I've seen it where if somebody's moved a couple years in a row, they're still withholding in a state that they don't live in anymore. And that's going to create a different problem for us. So if you have moved and you moved from company to a different company, yeah, that's going to be covered because now your new address is there. But if it's some big pharmaceutical company, I'm just trying to think of like Lilly. I've got a couple clients that are working with them. They'll place them all over the place, but sometimes not catch up on the withholding to make sure you're withholding in the right state. So not
Good
only
point.
do you need to, if you've move your LLC, move your S corp, move whatever it is you have, you also want to be paying attention, even if you are an employee, that to make sure that you're withholding the right state taxes, because that can come back to bite us too.
Yep. Good point, Conrad.
Thank you. I don't know if I answered your, well, kind of in there somewhere. Yeah. Next question.
Along similar lines, do you need to dissolve your corporation or close your LLC?
You want me to take that one, Conrad?
Yes, I think that's perfect for you.
I actually do have a couple of clients that have sold their businesses this year. So they've sold all the assets out of the company and they are no longer going to be operating that company. So there's no reason to keep it open. So what we'd like to do is go ahead and fill out all that dissolution paperwork with the states during this time of year so that then when we go ahead and we file the corporate 2020 tax return, we just mark it as final. We can be all closed up and it's all tied up in a nice, neat little bow. There's some other steps that need to be taken as well to make sure that it's all closed properly. This would be a great conversation to have with whoever your client success manager is to make sure that if you had payroll taxes, if you had sales taxes, there's some other things that you want to be cognizant of, and all of that, you want to have that wrapped up at the end of the year. It makes it nice and clean. So moving forward, and there's other reasons that you may want to dissolve as well, but we can certainly have that discussion at this time of year. So no reason to put that off.
Cool. Do you need to incorporate your business?
This goes in line with what we just talked about. If you move state, of course, uh, this could also be more of a, well, I guess this is the positive, not the negative. It's good that I didn't take the dissolve, because that's more, hey, you're finally throwing in the towel. It's been a rough year. Make sure that you kill it
Or maybe
before the,
you sold it for a lot of money.
or oh, see, there's the positive. I love it.
Yes, yes.
Yes, there's always a bright side of everything, of course. So with this, do you need to incorporate? Did you get laid off at some point this year? Did you decide that, hey, instead of going back and trying to work for somebody else, this is a blessing in disguise. I'm gonna start my own. I've always had this little side hustle, some kind of dream that I wanted to build my own company or something like that. Now would be the time to be talking about that. In most cases, it's probably a stretch to try to put something in place today to make it go all the way back to the beginning of 2020. That ship has most likely sailed. But if now we're coming into the new year, there's no better time to set yourself up the right way to now be a corporation the entire year.
Mhm.
Maybe this last year was your experimental year, didn't post the profit you expected to. It's your first year of business, it's acceptable, and the world we live in. No big surprise. It's been strange to see what businesses have thrived, what businesses have suffered. I wish we had a webinar 3 or 4 webinars ago of, what worked for you, because I wish there was a hard and fast of this is the strategy for success. Everybody's different. Sometimes it was what the boss did. Sometimes it's what the employees did. Sometimes it was because of the state they were in. So many different things are a factor of that. But in being proactive with the next year, looking at 2021, now is a great time to be talking about incorporating and talking about getting those things started so that you're starting off on the right foot, opposed to trying to catch up later.
So Conrad, you mentioned that we have some back webinars. Maybe Sarah could kind of fill us in on where somebody might find some of those back webinars that
That's a
we've
great
recorded
question, Kathy.
previously.
Absolutely. We have a YouTube page where we are posting all of our webinars, so you can check those out, review all of them. We have a couple different playlists, one for webinars, and then in the second playlist is also where you can find those how-to videos on how to use the client portal, and just with a lot of instructions pertaining to anything you might be looking for. So
We
And where
are
would
a
I,
modern
what is
tax
it?
firm.
What's it called? What's our
What's-
channel?
if you look for Your Taxes Matter on YouTube, it will come up. And then I believe we have the link in a few of our newsletters that we've been sending out. And then it should be linked on our Facebook and website, I believe, as well.
And we just did a MailChimp is our newsletter that's now going out, and we just did a video, a nice little teaser. It's just a picture of the video to come. A lot of new things happening over here, and we'll be debuting a new website soon. With it, a fun video with me and the kids, trying to again explain the portal, because I know a lot of this seems new for some of our clients who were at the beginning of the year before COVID hit, and they were actually still having in-person meetings. It was wild, but that's how people used to act. We could do those things. So this could be new for you if you're an earlier filer. If you came to us during that void of we extended the season, then it was something else, then it was something else, you're familiar with the fact that we've been doing things over virtual, virtual reality, virtual meetings. This is real. We are here. That's a thing. But yeah, with it, we did adopt the portal last year, so it's not brand new, but now it's we're doing a much harder push to help you guys understand and be here to help move forward in the modern age.
Mhm.
Luckily we had some of these things in place before the world lit on fire, or else it would have been an even more difficult season last year. But this year we're starting off this way. Everybody's more familiar with virtual meetings, and the only way we're going to be able to get your documents is through the portal and all those things. So yeah, if we're having any difficulty, now is a great time to be talking with Sarah and Michelle to get
Mhm.
that ironed out now, opposed to worrying about it at the last second and being stressed. No need to stress.
Mm.
We can all
Nope.
get through this together.
Yes.
Next
Perfect.
question.
So our next question, did you pay anyone $600 this year?
Oh, I will be happy to answer that question. And I just want to say, Conrad, it was the cutest picture ever with you and your family.
Thank
So,
you.
but
More to come.
so we have some people, we have companies, we have rental properties, and maybe you had somebody come over, maybe the gardener on a regular basis of a rental property, or maybe you had some IT people come into your business and they did some computer repair work for you, and they do not have their own corporation. They are John Smith, doing business as John Smith. And so you would want to provide them with a 1099 at the end of the year. And this gets reported to the IRS. And what it does is it really solidifies the deductibility of that expense. And this is the time of year, if you haven't already done so, where you've accumulated their federal tax ID number, you've gathered together their insurance information, their address, so that you have all of that and you can be ready to hit the ground. And we'll be issuing those, I believe, starting in just a few short weeks. We're just a few days away from the end of the year, and we'll start issuing those 1099s. So we'll be contacting companies with those documents. So yeah, something to keep in mind, gathering all of that information towards the end of the year. Absolutely. Mm-hmm.
And I did notice a question show up on our so I am monitoring. When I'm typing, I'm not answering emails, although I'm sure I have a couple of those to do too. But when I'm answering questions. Saw a question come up, because I'm not going to say I misspoke, but I left something out that you might want to also pay attention to.
Mm.
I was saying, yeah, when you move to a different state, the feds don't care. They do care. They want to
Mm-hmm.
know that you changed your address, but it's more of a letter that you're going to be sending them to let them know that, hey, I've moved. Like I said, you're not looking for a new employee identification or employer identification number. Nothing else really changes, just your address as far as the feds are concerned, the federal government, the IRS. Depending on the state agency that you go to, the state that you go to, and how they're running it, they're going to want, you're going to need a new state number. You're going to need all sorts of things. And depending on where you move, California to Idaho, California is, not, is going to charge you $800 at least to be a business here. Idaho, not so much. I should remember that. I see a lot of numbers every day, so I don't always remember specific ones. I think it was like, I want to say like 25 bucks. It was something ridiculous in comparison. So some states are better to have a company in, but it always helps when you live in that state. That's what I would recommend. You need to actually be doing business in that state if you want to do it the right way. And I've talked too much. Next question.
Did your company receive any PPP money, or did the SBA make 6 months of your loan payments?
This is a fun one. We've had Greg Bell on a couple times now. He's with the SBA in a local chapter in Orange County, and that's definitely our expert that we like to point to, as well as Tara Neha with Serendipity Payroll. She's all PP things. She's staying up to date on all this stuff. We just had our last webinar on that of super quick. This is what you want to be doing if you got it, let's not be quiet about it at this point. I mean, the main gist of the webinar was now banks are asking for those applications for loan forgiveness. It does not hurt you to fill that out and send it in now. There's even been cases of people have and they've already gotten it forgiven. There's some cases where banks are still kind of confused about it and they just want to see the application. It's not as if me filling this out is going to miss out on an opportunity later when they say all is forgiven, don't even worry about it. We're being compliant by following the rules right now. If your lender, the person who gave you this PP loan, is asking you for something, best not to hide. Let's respond quickly and effectively to let them know that everything is good. Here's what I use the money for. Start to fill it out. If you need help filling out that form, your CSM is available, as well as Greg is a good resource. Tara is a good resource. All you got to do is let us know if you haven't already gotten their contact information from a previous webinar or anything like that. So there's a lot of information out there. The second part of the question is a little more tricky, so I'm going to rely on my expert over here with me, Kathy White. 6 months was paid of the EIDL. You lost me. Go.
Well, for those businesses who had existing SBA loans in place when COVID came into play as far as closing down the world, the SBA came in and said, we will make 6 months of payments on this SBA loan of yours. So what happens is now we may have some phantom income. We talked about that in our last webinar based on what those payments were, but we do still get to deduct the interest expense, which is kind of interesting on those payments. So if you did have an SBA loan, if the SBA made 6 months of those payments, you definitely want to get in touch with us. We want to make sure that we're aware of what's happening and we can plan accordingly. So, absolutely.
Cool. Have you donated 60% of your AGI to charity?
I love this question. I always get clients, they always want to know, well, what's the max that I can go ahead and give, to my charity? And I tell them, well, it used to be 50% of your adjusted gross income. So for 2020, because of COVID, we have the new CARES Act that is now allowing us to deduct up to 60% of your adjusted gross income. So that leaves a lot of wiggle room for a lot of people to really make a lot of donations this year. So if you're itemizing, you can really take advantage of just increasing those charitable donations. Now, if I were to give $20,000 to my son, that's not really a charity because he doesn't have a nonprofit 501c3 organization set up. But if I were to give $20,000 to my specific house of worship or maybe the local food bank, even the rescue mission, and there is some nice nonprofits that people have that are near and dear to their heart that they are really, really hurting this time of year. So they're really looking forward to those donations. This is when people really can have the opportunity to be really charitable. But I do actually have some clients that no longer itemize, and so they're taking the standard deduction. And what we have new this year as well is we have what's called an above the line adjustment. So even if you're taking the standard deduction and you're not itemizing, we're still going to be able to deduct $300 or take the $300 adjustment on your tax return. So we'll be able to reduce your taxes, but you actually do have to give the $300 to a charity. And in case you're looking for something that might be really worthy of that income of your donation, Sarah, our very own Sarah, has a project that is really near and dear to her heart that she would like to share with us. Sarah, do you want to tell us
Sure,
about
thank
December?
you. So I am participating in a month-long style challenge. It's kind of like a jogathon, but I'm wearing a dress for every day of the month of December. So it's appropriately called Dressember. And it's a really fun nonprofit. They fundraise and advocate for the end of human trafficking year long, but they're most popularly known for the Dressember Challenge. And it's really cool because human trafficking is such a huge and kind of graphic and just overwhelming issue that it's really easy to feel lost and like you can't make a difference to help these vulnerable people. But Dressember offers a way for me to share this cause with my circle of influence, and it's very common for either people just to support me for my passion or just within being educated, realizing how big of an issue it is. And it's really cool to be able to all come together and see what our donations can do. Like they make real change. Dressember, they're very transparent about where their money goes to. They are partnering with 14 grant partners this year, and they work to fight human trafficking in different ways, whether it be prevention, intervention, or protection. So they work for the victims and also helping the survivors rehabilitate back into the world, because that transition can be extremely difficult. But it's really cool. Human trafficking, it's crazy. It's been reported in 127 countries. There's over 40 million people who are trapped in human trafficking, and it generates over $150 billion a year, which is bigger than it rivals like Google and Microsoft, and is bigger than Disney and Facebook combined. So it's definitely a worthy cause. COVID has only made things harder, whether it be increased exploitation of children and adults because of all of our increased activity online, as well as these people who are already a vulnerable group in our society. Our partner who works in New York, 80% of their survivors lost their jobs because of COVID-19. So that forced them, like many others, into food instability and making it harder to pay rent. So Dressember is cool because it's helping human trafficking, but it reaches every single issue that could come out of it or is even escalated by COVID-19.
Wow.
So if you need a place to donate to, I would love for you to consider Dressember. It helps all around the world, and it's a really great cause, and it's really special to me.
And we've shared Sarah's link a few times through our Facebook and through newsletters. So we'll also be sending that out with this recording. We'll send a link as well, so that even if you're still wondering about it, I think Sarah did a great job of explaining it.
Very
That was
much.
good elevator speech there. With it, there's more information out there for you to find. This is one of many organizations that need help right now. So yeah, as Kathy said, you've got a $300 above the line adjustment that's available to you. So I recommend you use the entire amount, wherever you want, but December should probably be one of them. Okay, next question.
Did you receive any unemployment compensation?
Yes, I think this was a big one. I was actually, I don't think I shared this with you guys. I was doing my MLO continuing education to get through, because I have to renew that before the end of the year every year. And they were talking about, this was all filmed, the two speakers, this was filmed back in the beginning of 2020. So they're saying things like, unemployment's at an all-time low, and I think we're really looking like a good year this year. And the comments below, every slide before this, no one cared, no one was saying anything. I was surprised you could even leave a comment on each video. They're like 5 minutes. Why would anybody? As soon as they started talking about the beginning of this year, everyone had an opinion. And they're like, oh, if only we knew, if only we knew. So unemployment, as you might be aware, is not at an all-time low. And one of the things that I was talking with a lot of clients and helping them kind of come to terms with it. I don't know if this is a machismo thing, if it's a guy thing. Machismo, it's a good one. Of well, I'm not going to go on unemployment. I'm not going to take a handout. I'm going to do all this other stuff. They're there for a reason. And this year has been hard on everyone across the board, and a lot of things have been out of your control. So I have had to talk a couple into go ahead and take it. You've been paying in for years. You've been working for years. You've been doing all these. There's a reason why they added $600 on top. There's a reason why all this was happening is because we're all trying to get through this together. And when there are funds available, just like the PPP, just like the EIDL loans, these were all sent out to kind of help us survive this. So something might show up on your return that you never thought would, and don't feel bad about it. This is why these programs exist. So yeah, we are expecting to see quite a few 1099-Gs reporting unemployment compensation for the year of 2020. Hopefully you didn't have to stay on it long and you were able to pick up another job. But if you couldn't and you needed to stay at home with the kids or something else happened, it was available to you. The tax point of it that I should probably be focusing on is more that you always have the option to elect to have some withholding against that income, but most people didn't. So if you received the full amount every month or every week, although you got paid every 2 weeks, uh, then that's okay too. But know that this is actual taxable income. Now, if you're in the state of California, California doesn't care. They're not going to tax you on it, but it will be taxed federally. So you had to certify every week when you were receiving it. One of the last boxes to check was always, do you want withholding against it? So I'm not here to shame you for not clicking that box, but I do want you to be aware that all of that income, if it replaced what was normally W-2 income that you had withholding against, that had some in. You had some skin in the game, so to speak. With this, not so much. You could have received, I've heard numbers now as low as just a couple grand because they were on for a week or two, to all the way up to 22 and more. So depending on how long you were on it, $22,000 makes a difference.
Mm-hmm.
With no withholding against that income, chances are you were on it, which means you made less money anyways. So your taxable income year over year isn't bad. And that's always the really badly timed joke. If you don't want to pay any taxes, just don't make any money. Never has that been more real this year. um a lot of people aren't worried about their taxes because yeah, my W-2 is half of what it used to be, and then I was on unemployment for a little bit, and then maybe I tried to start my own business. So we're expecting not a huge flow of income this year, just a lot of things that we got to work through, and unemployment could be one of them. So if you did end up getting on early, you got the additional $600 on top, and your total was close to $20,000 to $25,000, contact us now. Again, not much we can do in the last 2 weeks, but it's a lot better to know that you owe that money now so that you can act a certain way for the next 3 months so you can pay that bill on time. But that's still one of those up in the air. We're probably going to get an extended tax season again. Would love for it to just be back to normal,
Yeah.
but I don't see that happening. So who knows? I'd love to be wrong. I would love to be wrong.
All right.
All right. Did any dependents turn 14 or 17 this year?
Boy, those are some very specific ages. So as a family, if you have a son or daughter who turned 14, the reason why we're asking that question is there was, although there's probably very little of it this year, after school care and before school care and summer camp programs and things like that, There is a dependent care credit, and when the child turns the age of 14, we're no longer eligible for that credit. So that will be an interesting transition for 2020. And also, if your dependent turned 17 in the 2020 calendar year, and even if they turned 17 on December 31st, they are no longer eligible for the child tax credit of $2,000. They're still your dependent, but instead of receiving a $2,000 credit, now you're eligible for a $500 credit. So that may make a little difference on your tax return. And when you combine that with maybe $25,000 of unemployment income that you didn't have withholdings, you can see where we have the potential to make a little bit of a difference on that tax liability on the bottom line there on your tax return. So something that we want to talk about. And none of this is to stress you out. We just want to bring some things
Good
to
point.
mind
Good point.
so that we can talk about it now so it doesn't stress you out. I mean, better to have knowledge now than to be worried about, I mean, it's just taxes. There's so many other things going on in the world right now to
Yeah.
be stressed about.
Yeah.
So
You can,
we have
your
another,
plate's full already. Yeah.
yeah.
No, I the only other thing I wanted to add to that was kind of we saw it happen back in 2018 in our first year of the new code when it was suddenly the withholding tables were different, other things were different. You got a
I'm
thing?
really sorry. I have a
Okay.
family situation I'm dealing with. I need to bug off for just a moment.
You got it. So with talking about that again, it was the the dependents, the withholding tables changed, and a lot of people were surprised by that. If you're a client of mine, I most likely talked to you through this when we were talking about it. I was very angry with the new tax code because it took away from individuals and it gave more to businesses. And one of the things that happened was W-2s changed to where the withholding was a little off, and you technically got that refund throughout the year in the form of a bigger paycheck, but you didn't really notice it until you filed, and suddenly your withholding wasn't enough. The reason why I bring up this painful story again, there's a reason, um, is sometimes what saved the people was that they had kids that were under 17. Because now that $1,000 kid credit that they maybe didn't qualify before in the past, the thresholds, the income thresholds increased. So now you got that $1,000 credit, and it doubled to 2,000. So although the withholding was down, the change in the credit for the kid credit was enough to bring it up and over and make the difference. And I remember there was at least a handful of clients who I remember looking at the ages and going, saved you this year, saved you for 18, saved you maybe for 19, but when junior turns 17, you're going to lose about 15. And I have no need for quotes. It is, you're losing $1,500 in what would have been received pretty much the same as a payment. So now you're under withheld again, just like we were before. So this is something that you could have seen coming, might not have seen coming. And with that, that creates a little bit more taxes for you. Or if your kid's 16 this year, turning 17 next year, there's another reason why we want to be planning for that and maybe increase our withholding at our W-2 or increase our estimated payments if we pay that way.
Great.
Here we go.
Did you sell any investments at a gain or at a loss?
This one's me, looks like. So yeah, yes, this one we talk about every year. We get it all the time. We just talked about it not that long ago, to say that yes. So I sold all this stock at a profit. I made some money on it, but I have all these loser stocks. This is do I get to write that off, or I took the money that I sold and I just reinvested it in the stock market? Isn't that the way I get rid of the taxes on it? I get rid of the capital gains? Absolutely not. This was the difference between realized and unrealized gain. The only way we're going to be able to offset a gain is if we actually realize a loss. If we just have the stock in our portfolio and it's really not doing well, it's not going to do anything for us unless we actually get rid of it. Once we get rid of it, now that loss can offset that gain to the point of even more and above of about 3 grand. So quick math, if you have 10 grand, you in a gain, you have 20 grand in a loss. We're not worrying about any gain because now technically you have a $10,000 loss to write off. The limitations there is you're only going to get to take 3,000 of that. The other 7 is going to move into the next year until we eat up the rest of that gain. But we don't have anything to go against unless we realize it. So the main point of this question is, how is your portfolio looking? Do you have some huge gains that you're about to get taxed on in capital gains that we could offset by some losses? Or the other way, we had some really big losers this year. We don't think those companies are going to come back from all of this. Things are different now. So there are some industries that the buy and hold technique no longer works, and you might want to get out while you can. And if we have these losses, now would be a good time to sell those gains or sell that investment property or something like that. All of those there's way too many factors to talk about right this second, but talk with your CSM. That's a good way to understand what's going on here. That cover it?
I think so.
Kind of, a little bit. Okay, maybe. Who knows?
All right. Did you take a distribution from your retirement account?
Another good one. This is thanks to the CARES Act. This is a big one. You may have heard if you've got a 401k, if you got an IRA, you can take up to $100,000 out of it, and we will no longer be penalized that 10% penalty for early withdrawal if we're not of retirement age. If you're already above the retirement age, then you're fine. You're going to go ahead and get to take that free of the penalty, but it will still count as taxable income. What else came with that is you can borrow the money, no penalty, not borrow. It's almost treated like a borrow because then what we're given new in the CARES Act is the fact that now you get to determine over the next 3 years how you want to pay for it. That's brand new, which kind of makes even an IRA, which you couldn't loan against before, almost like a loan. Say you took out 100,000. When it comes time to file our taxes, we're going to get to decide what we want to do, whether we want to put a third of it back or we want to pay a third of the taxable income it creates. Now, in the past, if you took a disbursement, not only are you getting a 10% penalty if you're too young to take it, but you're also being taxed on all that income in that year. Your adjusted gross income increases by $100,000. This is why this is so important. Instead of having to report $100,000, you're only going to report 33.33333 dollars as the income for that year, or you have to put that money back in. So you could, over the next 3 years, put that money back, and in the interim, you had $100,000 at your disposal to survive, to get ahead. People can use that money for all sorts of things. One of the big things that I've been recommending to clients is whether you need it or not, you can take it. If you are that uncertain about all of this, if you're not sure where it's going to be and you're worried about your job, worried about your business, a million other things to be worried about, take out the money. Worst case scenario, when we go to file, put it all back if you didn't need it. If you have crippling debt right now that you're barely paying off, use that money to get rid of that high interest rate, and then you slowly pay it back or pay the taxes on it. That the tax that you would pay on a third of the amount that you pull out, I guarantee is less than the interest, the annual interest for certain of some high credit card that's at 25% or higher. So right now there's great opportunity to make some money moves, and this is one of them. This does expire December 31st. So if you're looking to pull out before they enact the penalty again, before other things come up, um, this is this could be helpful to kind of wipe that out. I'm trying to read questions and answer at the same time, so I'm losing my train of thought. But yeah, this is one thing that you could do to help offset some of that. Now, I can't imagine that over the next 3 months more massive change isn't going to happen, and that I wish I could believe that everything's just going to get fixed, but I'm pretty sure this is going to go on for a little bit longer. And with it, don't be surprised if they go, hey, you know how you could do that in 2020? Thanks to the CARES Act, you could pull money out and you wouldn't be penalized. You can do it for 2021 too. We haven't seen anything on that yet, so don't quote me on it. Don't hold me to the fire on that one. But there's a good chance that it could. If you don't want to take that risk, you have 13 more days to do something about it. Pull that money out now and deal with the consequences later. That's kind of the motto of this year. Next question.
Did you fully fund your retirement account?
Oh, hey there, Kathy. Do you want to take that
Hi,
one?
sorry about that.
No worries.
Excellent
Well, you
time.
know, I love to talk about retirement accounts anyway. So everybody
I was
wants to
trying to
know
save you that one. Yeah.
everybody wants to know how they can lower their taxes. And of course, retirement accounts are always my favorite because it's the only tax deduction that we have where we actually get to keep the money. And if you have, if you're fortunate enough to work for a company where they actually match your contributions to those retirement accounts, you definitely want to be max funding that. So that is something that you can actually do, and you still have time to go ahead and max fund those retirement accounts this year. As an employee working W-2, you can take your last pay stub and put the whole amount into retirement if you haven't max funded already. If you have your own business and you have your own retirement account established, we actually have the new Secure Act that has allowed us to do our funding to our retirement accounts all the way into 2021 based on our income from 2020. So we do still have some flexibility where we can straddle some of that contribution in retirement accounts. So there's still time to reduce your tax liability for 2020.
Great. The next question is, did you get married or divorced?
Looks like we're gonna take an hour because this one could go for a little bit. I thought we'd be through it quick, but we got a couple more questions left. So this one I'll try to keep short. Um, COVID has either brought us closer together or pushed us further apart. So if it ends up being the latter, no judgment, of course. I feel like sometimes people come to the office and they feel like they let us down if they have bad news or anything like that. It's life. We see it every day. Of course, we'd rather you stay together because that's probably better for everybody, but maybe it's not. If this did happen to you this year, wouldn't be surprised you've been stuck at home and maybe time apart is what kept you together. So if it did get to that point where something did happen, keep in mind that if it's finalized, which would be impressive if anything got through the courts this year, because everybody that I've talked to is everything's been delayed, everything's been pushed out. So what has to happen for this to be effective for the tax year that we're talking about is that you need to have an official date on that divorce decree of, well, not it doesn't have to be December, but it has to have 2020 on there. If this didn't get official, say you got separated, but it didn't become official till later, then it gets a little muddy. I can't say that you still have to file together because depending on certain circumstances, if you were legally separated for more than 6 months, you may still have the option to file single. So things definitely get complicated, but one thing for certain, if you got married, there's another person on your tax return. If you didn't, there's now a different filing status that you have. A lot of things rapid change here, especially if you don't have uh, dependent children. If best case scenario, and that's always the strange thing to say, you get divorced, you have two kids, each person can take one. Now we're head of household, which is pretty close to married filing joint. Still close to a preferable filing status. But if we only have one kid, only one person's getting that. If we don't have any kids, now we're single. And if I went from married filing joint to single, I could have a problem on my hands. So that's kind of a tricky one. But yeah, if either of these things happened, we should definitely talk. If you got married, maybe even that you did a courthouse wedding, you got it in time. If you're still waiting, it got postponed. I know a lot of friends who were planning on getting married in 2020.
Mm-hmm.
They're waiting till one day they could possibly have an event with family at.
Yeah.
So it just depends. But not a bad thing if you have gotten to the point of, yeah, we just want to we just want to be married, we want to make it official. I'm sure you can go to the courthouse tomorrow, make it happen, and you should be paying attention to, well, do we both have a lot of money? Because if we both make good money and we're getting married, your adjusted gross income just jumped up really high and we could have an issue. If somebody makes a lot of money and somebody doesn't, it could actually be beneficial. There's so many different ways that these things mingle together that you got to talk with your CSM. And this is something that you could make a decision on. Are we going to go ahead and pull the trigger this year, or are we going to wait 2 weeks to do it in January? Could be a completely different outcome with your tax return. And that is an actual quick question. That shouldn't take too long. Next one.
Did you pay or receive any alimony?
Take it.
Well, this has changed because it used
Yeah.
to be the people who paid the alimony were able to deduct it, take the above the line adjustment, and the spouse who received the alimony would reclaim that as taxable income. Well, they changed a little bit of the tax code back that affected our 2019 tax returns. In order for the amount to be deductible, it was contingent upon the date of the divorce agreement. So there have been some changes there. So not all of that alimony potentially is going to be income to the one who receives it, and not all of those alimony payments may be deductible for the person who pays it. So it's something that we should definitely have the discussion about. And then we need to just kind of review those court documents. And if you're going back to court to discuss alimony, there are a few things that need to be in those court documents. So you want to make sure you get a good representation when you go to court. So all of that is all buttoned up and taken care of properly.
Great. And then the last question I have.
Number 20? Wow.
Where is that calendar link?
Oh,
Calendar link.
what calendar link? That's a great question. We are getting to that time of the year where that question starts to come up, and this goes back to a comment that I kind of mentioned in the beginning. If you were an early filer, things were much closer to previous years. If you filed past March, you kind of got used to the new system. For us to be efficient and effective, which is always our goal, we've come up with a new system in this day and age, and thank goodness we have the portal. Thank goodness we have Ring Central to be able to do virtual meetings and things like that. Because now, for us to not go back and forth a million times and trying to figure out what's really going on, now we have a way that you can, as you get tax documents, if you want to put them in one at a time, you can. If you want to gather them all together and then put them in the portal, that's preferable. Do it then. With that, we'll be able to receive your documents. There'll be input. We'll come up with a draft. We'll know what we're looking at, what we're missing before we even get together. And I know that sounds tedious and like a lot of work ahead of time to do it, but when we do it that way, then that meeting can be focused on actually talking about the numbers. This is a change that's been coming over the years. We don't want to be inputting the numbers in the meeting, because as we're talking, I'm not really listening because I'm like, oh, I got a lot of stuff I got to put in. So you like Star Wars? That's what I do. That's, if you hear me talking about Star Wars, it's because I'm really trying to catch up on something else. I love talking about Star Wars, but that's not what our meeting is for. Our meeting is for getting you a complete tax return. And the more documentation we have ahead of time, the more information we have ahead of time, the more conversation we have ahead of time, makes that meeting so much more powerful, and then doesn't need it to require a second and third follow-up of, well, now I've seen 20 or 30 returns and I wish I had that memory, but I don't, of, okay, now I'm going to have to look at my notes again. Now I'm going to have to look at your return again. Now we're going to have to do all these things. I'd much rather it be, let's get you in, get you out, get you on your way, because that's what everybody really wants. Whether we're a compliance client or an advantage client, we want a tax return at this time of year or in a couple months. We want to get through that. And once we get through that, then we can start actually planning for the future and being proactive opposed to being reactive. I've said that 3 or 4 times too. So that must mean something. But yeah, that's where's the calendar link? You're not going to get it until you've activated your portal, you've put your documents in the portal, you've received a draft through the portal for you to then look at and go, hey, I like that, or hey, I got questions, or here's additional documentation. Then when we get ready for the completion meeting, we're good to go. You're going to see that link. You're going to find a time that works well for you, and we're going to get it done. I guarantee it.
It's nice with the client portal because it also allows our taxpayers to go ahead and sign the documents that they need electronically. Since we've all moved to this electronic platform where we're virtually meeting, it's nice to know that the documents are secure and that we're able to get things completed and filed efficiently for everybody. And then you have access to copies of your tax returns up in the cloud. So you'll always have access to that. You don't have to email us during the off season when you go to refinance your properties. It's such a simpler process that we're trying to keep everything as streamlined as possible. I think that's really key and important.
Well, and you brought up a great point, and I just want to touch on this, and then we're pretty much out of time. This is great. We filled a whole hour. Way to go,
I
team.
hope we answered all your
Um,
questions, Sarah.
yeah, yeah. She said last question, so I was just gonna keep going. Yeah, the point that I wanna reiterate that you brought up is security. I've got a cousin-in-law who works in the Oval Office. Is cousin-in-law even a thing? He's not even official. He's about to marry Allison's cousin. It's not even nowhere near related to me. Really cool, really cool dude. Really like him a lot. He is actually big up in the cybersecurity world with the government, and you would not believe some of the things that he's at liberty to tell me. I can't imagine what he's not allowed to tell me and talk about. Cybersecurity is a real deal. And before I was like, yeah, we could still email it. Oh, I'll password protect it. Oh, I can do all these things. We went to TaxDome for multiple reasons. One of the biggest ones being you can electronically sign and you don't need to print something out. You can just click a couple buttons and we're good to go. Make that part easy for you. But it's also because it's secure, because that's how we're going to, how there's double authentication. There's all sorts of ways that this makes sure that your documents aren't going to somebody else. They're going right into your file. This is
Yeah.
your special, that's why we call it a client portal. Yes, TaxDome houses all of the portals, but it is your portal. Your stuff isn't going to be mixed with anybody else's, and only you and I or you and Kathy have the access to those things. So
Yeah.
yeah, this
Good
is
point.
yeah, security
Identity
is
theft
huge.
is true, is a real thing.
Absolutely. You
Absolutely.
might have even received a letter. We're seeing a lot of these coming out right now of not only has the IRS not been able to open 300 million letters, was it?
No, 3 million.
3 million. Okay, that's better than 300 million. Okay. Not only is there 3 million unopened letters to the IRS currently, but they're also sending out stuff left and right now going, "Hey, we just want to do a double check. Is this you?" There's been a bunch of identification verification. I don't think that's the right way to something like that.
Sounds
But
good.
there's been a lot of that going out to just they want to make sure everything is on the up and up
Yep.
because they know that in a year like this, when they're understaffed, overworked, people are going to try to be silly and they want to make sure that the right things are being filed still. So let's not help out the hackers and the identity thievers out there. Let's be smart, keep your stuff safe, keep it secret, and let us help you. Help us help you.
There
I
you
think that's
go.
what I want to end on. Yeah.
Yep.
Well then, do we know of another webinar before the end of the year? I think this could be it.
I
Huh?
I don't think, yeah, I think we're
Maybe,
the
maybe,
end of the year is pretty close.
maybe we'll do a holiday party where we're all together and people can come on and share cocktails or something. I don't know. Who knows? Well then, from everybody at the team, uh, I'd like to say happy holidays and
Happy
may the
holidays.
new year be better than this year.
Yeah,
How about
absolutely.
that?
Stay safe and healthy out there.
All right. See you guys around. Thanks for coming. Bye
Bye.
bye.